All right, I'm gonna go through 20 charts in this video. These 20 charts might give you that guidance you've been looking for. As you can see in this seasonality chart you see on your screen right here, you can see this is pretty much where we're at right now. And this per the seasonality going into the end of November throughout the December until end of this year, as you can see right here. And if we're right here, according to this seasonality chart going all through 1950 to 2022, more than likely we have a high probability November and December being that strong seasonality-wise bullish months. This chart recommends and suggests that we may continue higher with fluctuations along the way. So analog here, I've actually just updated this chart. This is comparing to actually 1983 and 2023. I've actually went viral with this chart just about several months back, and this is the updated chart. So as you can see here, what we're trying to look for is obviously the market's overall trend movement. We're talking the primary, and this is a NASDAQ composite. So as you can see how this market moved here, 2018, 2019, we see that fluctuation, we make a move, we saw the COVID decline, made a hefty upside move here, and obviously we're gonna see a correction as market does not go straight up. It's gonna have its ups and downs. That's what we call an uptrend with higher lows and higher highs, right? Low, higher low, high, higher high, higher high. Very, very simple, basic stuff, right? Even the way this market moved here, 2019, 1979, 2020, 1980, V-shaping higher, V-shaping higher, made a huge move around during 1980. And the market became very lethargic here with lower highs and lower lows. In the midterm or so, we saw that downturn for about a year and a half, very, very similar to what we saw in 2022, 2023. And market pretty much went berserk to the upside. As you can see, you might be wondering, okay, that 2023 chart here does not look like 1983 because we're not seeing this thing going straight up. Rather, we made some move here and we did witness a little bit of that sideways to downturn move here, just July, August, September, right? Well, my friend, market does not repeat. It rhymes. Obviously, market is not going to able to duplicate exactly how the market worked out in 1983. However, we can kind of gauge and see where the overall trend is. That's what we're trying to figure out with this analog. This was actually the October low here, middle of October, when the spider was at 410. This was literally at the low, talking about that primary to moving average, a pink or purple dotted moving average, exactly or similar. Again, it's not going to be exactly the same as 2000. Everybody keeps saying, well, okay, today isn't 2010. Well, I already know that. I know that 2023 isn't 2010. Even
20 minutes later,
when the trend is shifting, right? We can kind of use this moving average to guide us because market moves in fractals, right? So with the higher lows and higher highs, if we're looking at things more of a long-term perspective, can we say that we got some of these higher highs here, looking at things from more of a longer term, right? So you got higher high, low, high, low, high. Where is that gonna be that higher low? And this moving average is letting us know this is the potential level. This is the level that you should pay attention.
20 minutes later,
Bottom 2009, market subsequently made that rally, and then we found that higher low. Yes or no? We found that higher low, 2010 low right here, and then market made that move to the upside. Obviously, as of today, well, spiders up here, ladies and gentlemen, that became the low. It's funny because of Boeing here, and the reason why I want to share this chart with you really quick is because you would encounter a scenario like this over and over again every time you're trying to trade a stock, because what's going to happen is you're going to draw your little lines, your pivots, your resistance, your support levels. You think, well, hey, you know what? I'm going to go long as soon as it breaks above the resistance. Well, my friend, market already knows that. Market already knows what you're trying to do. So it's going to trap you. It's going to trap you at the top here. You go long and you see that massive amount of panic. And so now you think, well, we've broken below the support. Now that finally Boeing is surely is going to break down. And especially all the bears out there thinking that recession, the Great Depression should be coming any minute now. Well, obviously you see a chart that breaking below the major pivot or major support, right? Especially for the fact that we saw a massive amount of trap right here. Well, a lot of times what's going to happen is during this move here, even on the rise, there will be a lot of short sellers trying to short this here, and the market breaks out to the upside. And it's very standard practice, and I've seen it over and over again. Look at this Nvidia here. Nvidia is up 360% since the October. That's 300. This stock is up 360% in just about 14 months. The biggest question is, after 360% move, is this a great buying opportunity at this Riot here? This chart, it looks sort of confusing here, but it's actually very, very simple. Basically, we got the bearish cross, bullish cross. This is my primary term moving average. So you can see the crypto, especially in crypto space, with the Bitcoin and everything else, they like to move in these cycles, right? Every couple of years or so, these guys crash down 80-90%, right? So basically, just think of it as crypto stocks meeting with the Great Depression, like 1929 Great Depression every couple years. There's a good upside to it. It does make some crazy amount of move to the upside every couple or several years, as you can see after the bullish cross. And this right here, it is not measuring from the low, is actually measuring right after the bullish cross signal has flared. The reason why I measured it at the, or right after the bullish cross, not at the lows, is because, well, it's extremely difficult to go long right at the low. Nobody's gonna find it. However, if we kind of, observe this bullish cross signal, and if you go long, as soon as this bullish cross signal flares, right? The bullish cross signal right here, talking about the moving average is crossing to the upside after the bearish cross, right? That's not, what I'm saying is after we go long, after the bullish cross, it's still, I'm showing you, it's still not too late to go long, because in 2016, ladies and gentlemen, or late, early 2017 or so, if you went long after this bullish cross signal, and if you're patient enough, at least for, looks like 6 months or so, and there's a little bit more downturn here, well, it handsomely rewarded you with 1,100%, late 2020, late in early 2021, not at the low. Not near the lows. Nobody can do that. Even if people bought near the lows, there's no way they're going to be holding any of that for like a year or so. They're going to be getting up pretty quickly. So they're not getting 2,000% gain or anything like that. So even if you waited until this signal flare, and if you went long anywhere up here, you would able to catch. If you held just for, I don't know, 5-6 months or a year, you could capture some of these gains there. Well, what about now here in late 20? Isn't that interesting? This signal always happens towards the end of the year. That's end of 2016. That's end of 2020. And that's end of 2023. Wow. We're trading in this vicinity, right? Have the exact same setup happening coin. There's exact same happening Ethereum and BITO and Bitcoin as well. And Bitcoin has already been making a move here. Possibly this right here is here. And maybe we may see another couple months of move here. Small caps and the banks, they're pretty much breaking even. They didn't go anywhere or slightly negative. So as you can see, it really didn't do anything for the last 2 years or so. It's very interesting because small cap has never done that. Even 2009 lows, we saw that bottom. 2010 lows, we saw that bottom. 2016 lows, even COVID lows. This is the first time we're witnessing Russell 2000 just basing out here in this vicinity. You have to understand though, this is the support and it is holding, right? Prior resistance possibly a new support. It's been basing out in this vicinity. Now that the entire market is seemingly breaking out and everything is overpriced. If you look at Nvidia, 300% you get NASDAQ, semiconductor, these guys are flying. So where can the value investor can look for something of value? Well, this is also 2000, another chart. This is updated chart with the monthly bullish divergence. As you can see, we're seeing a signal we haven't seen in 13 years. Look at this. 2003 low, that was after the dot-com bubble crash low, 2003. We've got the financial crisis low, 2000. How many people out there thinking, you know what, man, if I coulda, shoulda, woulda bought that 2003 low, I would have been so rich. If I woulda, coulda, shoulda, woulda bought that 2009 low. Well, you didn't, because most people didn't, because most people are extremely scared.
So if you want some, this is your death wish. Better come correct, because I came to break you off. Whoop that trick, get him, whoop that trick. Whoop that trick, get him, whoop that trick.
NASDAQ here, bear with me, almost done here. NASDAQ, we have the island up gap. Island up gap still remaining open here. I talked about the fact that in my Twitter feed that as long as this island gap, it remains open, the stronger its presence going to be. Because this is island up gap, as you can see, for 4 days, it means we stayed above it. Right, and look at this today's move. Very, very strong move there. It's a spider cues and semiconductor. We have not seen a bullish pressure, buying pressure, going vertical like this in about 4 years. Anything similar was back in 2018 December lows. And that move continued because right, this is what you're seeing today. This is today's chart here, 2023 spider Q semiconductor, right? 2019 or 2018 December lows. That move continued for the next 5 months with minor about 3% correction along the way. There is a gap. During November 2022, there's a fun fact right here. You see this gap right here? This is spider 350 up gap that was opened up during November 2020. This was the election week. That was the election week when the Biden and the Trump, they're battling it out. And I believe this was the announcement next couple days later, when the announcement happened that the Biden has become the president of the United States, and we saw this crazy gap up and faded. What I'm trying to tell you is this 350 up gap from November not only it is still open as of this day, it acted as major support on this decline that we witnessed through August, September, October lows of this year. It got down to this level, to the cent, and it bounced.
Perfect.
We got volume. This is a weekly chart spider. Look at this volume here. This is 2020, or this year actually. This year's weekly upside run. And after about 8% decline, this was a 10% decline. Look at this move. Look at these volume here. Definitely lots of buying volume in that vicinity. These smart money's accumulating while everybody else was calling for that Great Depression. And as you can see, not only that, we have the 3 white soldiers, similar to here. We got the 3 white soldiers, and we have these accumulation, 3 consecutive weeks of buying volumes. This is another spot. This one's a little bit complicated. I don't have time to explain everything. There's a blog on my in my blog, twotradersclub.com. I have a blog about it. Go and read about it. I explain all of this. This is also interesting here. This is the this long-term moving similar to that. You see that bullish cross, bearish cross. It's similar to, on the crypto stocks. It's similar here. All right, so that happened. And this is spider chart. And what happened was really retesting the primary term moving average as new support, right? So what happened was though in 2020, this was a COVID low here, right? That's a COVID low. Market makes a move. Those are my long-term moving averages. Finally breaks above it, come down, retested, and the market just went pretty much vertical there for about 2 months straight. Well, now we're almost into like 3 weeks of run. Potentially could be a similar. Again, market is not going to repeat. It's going to rhyme. Just keep that in mind. So this here is also, I wrote and blog about this, why I believe there's a Fibonacci and all that stuff. Again, this is complicated. I explained that on the blog there. You can check that out here. I'm gonna let you guys go with this. So this is the most up-to-date spider daily chart with the oscillator. You're gonna be thinking, okay, well, surely it's overbought. Yes, we are overbought. But in a bullish uptrend, overall uptrend, because we are in an overall uptrend since the 2022 October lows, right? We looked at all these charts in this video. So we are in a primary term uptrend, yes, with higher lows and higher highs, yes. So we're in a primary term uptrend. When the oscillator hits the overbought level, that's not a lot of times that's gonna become a bearish signal. But what it could tell us is there might be some sort of a consolidation coming, so they can, you know what I'm saying, that oscillator needs to reset before going back up. Here you can see we saw very much short-term pullback here before making another leg higher for another month or so. So this oscillator being overbought is actually midterm bullish, while the micro to short term letting us know that market is stretched and possibly needs some kind of a short-term pullback or consolidation. But with all the data we've discussed in this presentation, the market is already, as we talked about the fact that market is already doing the unthinkable, right? Market is already doing something we haven't seen. So we have to account that into, okay, market is in this phase where it's doing something that nobody expected to see and doing something that majority of people did not anticipate for this market to just keep on going up like this. And nobody knows where the top is. How I would interpret this market is we want to continue to give benefit of the doubt to the buyers while understanding the move is stretched in the short term. However, in the mid to long term, all these data suggest that we're extremely bullish going into the end of this year, right? Going into the end of this year, even possibly first quarter of next year.